This is something that you absolutely need to have. And essentially, they've indicated that whatever they can get in terms of supply for that, they will definitely be able to find orders for the rest of the year. So it really will just be a case of, when it arrives and at what volumes are available, and that will determine what it costs. There's a lot of speculation about, whether it's going to cost more in terms of what they can charge for it. Certainly costs more to make because it's a more complex chip with more transistors, more dies and so forth. But given the fact that even if it does cost a lot more, it's probably not costing more than a couple of $1,000s, and they're charging multiple tens of thousands of dollars. The economics aren't going to be terrible either way.
Well, you mean so Jensen Huang can get another leather jacket? Like he'll be able to do that?
I don't think that's been a problem for a while.
Well said, as always. All right, Ian, we'll be looking for your commentary after NVIDIA reports. Thank you so much, Ian King, U.S. Semiconductor and Networking reporter here at Bloomberg News, joining us from San Francisco. This is Bloomberg.
Well, as you know by now, Bloomberg News, in collaboration with Morning Consult, is releasing monthly polls focusing on voters in key battleground states, including Arizona, Georgia, Michigan, North Carolina, Pennsylvania, Wisconsin, and Nevada. President Joe Biden trails Republican Donald Trump by 4 percentage points across 7 battleground states in that monthly tracking poll. We're going to get to that part in just a second. First, though, to more of what we learned in the poll, this time including worries about violence surrounding the November election, because there were some pretty surprising findings in the most recent tracking poll. Gregory Cordy is Bloomberg News White House and politics reporter. He joins us from our Washington, D.C. bureau. Gregory, I was surprised not just to see the portion of folks who are concerned about violence around the election, but how it broke down across party lines. What did you and Morning Consult find, and what were the questions that you asked?
Yeah, this was the first time that we asked this particular question. It's basically, how concerned are you, or how much confidence do you have that the election and its aftermath will be free from violence? It's the first time we asked that particular question, and so we weren't quite sure what to expect, but half of the voters in the swing states that we surveyed said they had no confidence, little to no confidence, that in other words, they were concerned about violence around the election. The surprising part of that is not sort of knowing how to gauge that. You might expect that one side of the political aisle might be more concerned than the other, but what we found is Republicans and Democrats almost equal in terms of their concern about this. In fact, it's statistically exactly equal. And if anything, it's independents who are most concerned about it. They're sitting in the center and looking at the extremes on the right and the left and worried about what might happen in this election if one side or the other doesn't accept the results.
Hey, Gregory, it's violence, it's also misinformation, it's also about foreign interference. Walk us through what you found on those fronts, specifically what voters are worried about.
Yeah, on those other questions, we do have a little bit of a trend line because we've asked them before, as long ago as October, and what we're seeing is concerns about voter fraud, concerns about misinformation, about foreign interference, all moving up as we get closer to the election. We're now 6 months out. People are being inundated with news, and they're about to be inundated, at least in these swing states, with wall-to-wall television ads, and it's going to be absolutely unavoidable. You can almost feel the national blood pressure rising in these poll numbers as people have worries about how this election is going to turn out along a wide range of measures.
It's sort of, it all comes down to these swing states that you've been focused on, that you and the team have been focused on over the last few months. And I'm wondering what the tracking poll tells us about who's leading there and how it's really shifted in recent months.
Yeah, Tim, you and I we've talked about this month after month as we do each month of this tracking polls. And the point that we make is let's not get too obsessed with small movements either way in terms of predicting what's going to happen in November. We're still 6 months out, but we can't kind of look at it and see directionally. Is Joe Biden in a better or worse place than he was a month or two ago? And I think this poll shows Biden is in a better place than he was at least a month ago. It's small, but it's measurable. He's now trailing in these swing states by 4 percentage points. Last month when we talked about this, it was 6 percentage points. But more to the point, if you look state by state, those blue wall states, those northern industrial states of Pennsylvania, Michigan, and Wisconsin, he's competitive in. 1 or 2 points either way. That's, for all intents and purposes, with our margins of error here, that's a statistical tie. Where he's trailing is in a lot of the Sun Belt states, Georgia, North Carolina, and Arizona. And I'll have to tell you that Nevada this month is sort of the enigma. We had that as an 8 percentage point lead by former President Trump last month. Now we see it as dead even. I'm looking at other public polls because you should always look at a wide variety of polls here. And we're seeing everywhere from Bloomberg News Morning Consult poll calling it even to the New York Times recently calling it a Trump plus 12 state. So we're looking at Nevada. Nevada is really hard to poll in. But it just goes to show how uncertain a lot of this race is as we begin to identify which voters are actually going to show up.
Maybe it has something to do with there's like something playing really good at the Sphere and like people are like, you know, not around.
A lot of out-of-staters went to that one.
I'm just saying.
Yeah.
Gregory, you know, I was listening, I know Tim and I both listen to Surveillance in the morning. It's part of kind of our read-in and getting prepped with Paul and Tom and the gang. And what's interesting is they brought up, like, I think Tom was asking, have you ever been polled? Have you ever been polled? And I don't think I've ever been polled. I don't know if you've ever been polled.
I've been polled in local politics.
Like
in
on
New
the
York
street
City.
or
No,
something?
New York City, like a phone call.
Oh, you have?
Yeah.
But I mean, like, a lot of us will be like, I've never been called. Like, who are they calling? Or who do we call?
I hear this a lot from people. I don't believe the polls because I've never been polled, and none of my friends have ever been polled, and it makes me wonder if you've polled your friends to know how many of them have been polled.
That's too meta.
Very nice.
But look, I lived in Ohio in 2000 and 2004, and I got polled a lot because, so those of us who do not have the pleasure or the privilege of living in a battleground state these days, you might not get polled a lot. You will get polled more often if you live in competitive places. Look, this is how polling works. We take a very small sample of a larger whole, and we try to extrapolate if we're doing it right, if we're polling the right people, if it's either a random sample or we're weighting it correctly, that smaller sample should reflect the larger whole because it's absolutely, you know, it would be completely unfeasible to poll everybody in a state. Yeah, just because you haven't been polled, don't take it personally. Very likely a pollster has interviewed somebody like you who has opinions very similar to yours, and statistically that's all going to kind of come out in the averages.
Hey, Gregory, before we let you go, I want to touch on something that we find really interesting because we cover AI very closely. There was a question about AI in the poll this time. Talk a little bit about that.
Yeah, so we asked them about a number of tech topics in terms of, you know, how people feel about TikTok, how they feel about how AI is going to have an impact. And what we found was biggest concern that swing state voters have is around privacy. What happens to their data when these large language models just sort of swoop up everything. But then secondly, jobs. And what I found interesting about the concerns about jobs, and it kind of goes back to what we were talking about, concerns about violence in the election, how evenly distributed those concerns are across the electorate. I had maybe expected to see white-collar workers, professional workers, more concerned that AI might take their jobs. You know, this is sort of the equivalent of the robotics revolution that may have you know, the automations that may have cost some blue-collar jobs. Here, though, we're seeing blue-collar workers, white-collar workers, older, younger. The concerns about jobs kind of cut across demographics.
All right, going to leave it there. Always fun, always informative. Gregory Cordy, Bloomberg News White House and politics reporter, joining us from our D.C. bureau. Coming up next, from politics to small business. That's coming up on Bloomberg Business Week.
3:21 on Wall Street. We do check markets all day long at Bloomberg. We have got the Dow, the S&P, NASDAQ, all lower, all trading close to session lows. Stocks fell after the latest FOMC minutes signaled officials will remain in no rush to cut rates. Traders also awaiting NVIDIA's results. Right now, the S&P is down 27, down 0.5%. The Dow down 252, down 0.6. The NASDAQ is down 69, a drop right now, down 89, I should say, a drop right now of 0.5%. 10-year, 4.42% with a 2-year, 4.87%. Spot gold now lower by 1.7%, $23.79 the ounce on gold. And West Texas Intermediate crude down 1.7%, $77.31 a barrel. NVIDIA, certainly the big event after the close of trading. NVIDIA shares right now down 1.5%. Target also a disappointment after earnings. Target shares down now by 7.8%. So what about the broader earnings backdrop? Liz Ann Saunders is Chief Investment Strategist at Charles Schwab.
Earnings do need to continue to surprise on the upside because last year's strength in the market was all multiple expansion because you didn't have much in the way of earnings growth. So I think the earnings do have to play catch up.
Liz Ann Saunders of Charles Schwab. Again, NVIDIA after the bell, complete coverage on Bloomberg Radio. NVIDIA now down by 1.5%. Recapping Fed Wednesday, and we've got the S&P down 27 now, a drop there of 0.5%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Really do appreciate it. Small business, you hear it all the time, but it really does power a huge part of the U.S. economy. The country's 33 million plus small business companies were responsible for almost 2/3 of new jobs from 1995 to 2021. This according to the U.S. Chamber of Commerce. Someone who has a finger on the pulse of small business is Aparna Kurjakar, Chief Revenue Officer of Business Markets and SaaS over at Verizon. Aparna joins us on the program right now from Hawaii. Aparna, good to have you with us this afternoon. We love talking to folks like you because you do have a good view of what is happening in the U.S. right now, and that's exactly where I want to start because you do oversee a lot of the small business at Verizon, and I'm curious what you're hearing from clients and seeing from clients right now when it comes to the numbers.
Yeah, absolutely. And thanks for calling out. Firstly, really, really happy to be here. Thank you for calling out. SMBs are truly the backbone of the U.S. economy. 99.9% of businesses in the U.S. are SMBs, anywhere between 1 to 1,000 employees. So that's a huge diaspora, but they have some very, very critical value within the U.S. ecosystem. Definitely greater than 40% of the U.S. economy runs on them, as well as greater than 40% of employment. And what we're seeing there are some underrepresented segments within the SMB economy, specifically Latinos, specifically minorities, and those could be a huge unlock for U.S. economic growth, not just in terms of local growth, but also as we start thinking about the diversity and innovation that we can bring to the system, the U.S. economy as a whole. And we are very excited to be partnering with small and medium businesses across the board, all sizes and shapes, to support that growth.
All right, so you know that we have been talking about the inequalities in terms of helping small business, but in particular, small businesses run by minorities, and pick, your way of kind of dividing out that group, whether it's run by blacks, whether it's Latinos, whether it's women. So I'm just curious what you are finding that you are doing today, Aparna, that actually moves the needle here.
Yeah, absolutely. So what we're finding first off is, one, there's good optimism in these minority populations. Over 78% of them are saying they're better off today, and they indeed are, than they were last year. That's a whopping 18% points over the non-minorities. That's a great story. But what we need to be doing is making sure that we continue building on that realistic optimism. And they have all the same needs as other businesses, but SMBs especially, as you can start thinking about their extra special needs, it's all about access. And access comes in 3 ways: capital. They definitely don't have those deep pockets. especially the minorities. So we've got to make sure that they're not needing to dip into their personal savings and they're not worried about living from one bill to the next. The second really is about how they bring in good workforce and skilled workforce. And the third, which really helps with both the capital as well as the workforce and helps them thrive, is technology. Now, the good news is they are leveraging technology already. Over 40% of them, much greater than the non-minority SMBs, are seeking the right kinds of technology for innovation, for growth, and for efficiency. And the need there really stems from, hey, where do we go to find that technology? How do we know what to use, where to use it? A whopping 80% per our survey for the Latinos is telling us that that whopping 80% wants access to folks who can help them get to the technology. That's really the critical linchpin in getting them to where they can be on a level playing field with the rest of the businesses.
Well, I always think about, when we're talking with someone like you, Aparna, obviously small business, that's a big part of your business as well, right? Obviously playing with big companies, but also small business. What's interesting is I recently talked with the administrator of the Small Business Administration at Milken, and we did a panel there. And, one of the things we talked so much about was capital. And I do wonder how you guys think about it at Verizon of being maybe more of a partner on the capital side of things when it comes to small business, because especially when it comes to minority, in 2023, just 32% of Black owners were fully approved for a loan or line of credit compared to 56% of white entrepreneurs. Black, Latinos, others just not getting the same access to capital within the established system. So how do you think about that? I understand the importance of technology, but a lot of times it's just having money to pay all the bills.
Yeah, absolutely. And as I was saying, the need is absolutely acute. So a couple of things that we are doing. Number one, technology does help with sort of lessening the burden on capital. If you're using tech the right way, you can be doing things a lot more efficiently, differentiating and bringing in the revenue. And we come in a big way there. But there's a second piece as well. So we partner with our CSR, our Corporate Social Responsibility Group, and we have a platform called the Verizon Small Business Ready platform. And one of the unique things this platform does is it allows for these businesses to learn how to go seek out capital, learn how to go seek out funds, either federal funds or any other funds. And we also help seed some of these businesses in a good way. We're really proud that over 300,000 businesses, we just crossed that mark of 300,000, are leveraging this platform to seek out the right kinds of resources for that access to capital. We can continue doing more, but we're proud of where we are at today there.
Well, speaking of access, I got to ask how you think about pricing when you price the plans that you offer from Verizon to these small businesses in the context of these businesses being, one, small businesses, two, being strapped when it comes to cash, and three, not necessarily having the access to capital that other business have access to. So how do you think about that in your pricing strategy? Because yes, you're a business, you're a publicly traded company, you have metrics that you have to hit, but at the same time, you need to serve customers in a way that will make sure that they choose you rather than competitors.
Absolutely, and I think I called out earlier too, these small businesses come in various shapes and sizes, different verticals, different needs stemming from that. So before I talk about the pricing, it's really thinking comprehensively about the technology needs and making sure that we know and they know that one size doesn't fit all. So what we tend to do is make sure that we talk to that customer locally, understand what their needs are, and because we are serving the majority of the SMB population, we know where we want to start them in terms of the technology needs. What is it that they need in terms of connectivity? Cybersecurity, such a huge opportunity there, right? Especially for small businesses as they're thinking about ransomware attacks and such. And then also collaboration tools, and finally digital tools. So we make sure that we are understanding their needs. We start them where they're at, and then we grow with them. What we also do is, especially for small, medium businesses, we have special programs, and we also have, every 6 months, we bring in a SMB Days week where we bring in these SMBs, we do a tech check, and we give them special pricing, special promo, so they can start off and build from where they're at. And we're pretty excited to see just how much these companies are thriving and then growing with us.
Connection lost.
I'm curious too about I want to end with the outlook, because that's what we're focused on here at Bloomberg. We're trying to parse through the minutes from the Federal Reserve's most recent meeting to get an understanding of how members of the Federal Reserve are thinking about the economy. Give us a broad strokes view on how business is for you and how that's reflective of the economy. Just 30 seconds left.
Yeah, so we definitely see a little bit of the headwinds coming in from overall economy, but the outlook is good, especially for the customers, the businesses that we work with that are leveraging technology, and that is the key. The more you use technology, the better your outlook is going to be, and we see that positivity in the customers we serve.
All right, going to leave it there. Hey, listen, good to get some insight, though, into what's going on in the small business community. As we know, we talk about it a lot here in terms of the importance to economic activity and outlook.
And I knew when I saw this interview, I had to go to you to ask you about what you talked about at that Milken panel that you had.
Well, this is what we
just
talked
a couple
about.
weeks ago.
And it was about durability, viability, access to capital, because all of this kind of stuff. And technology was a big part of it, too, I will say, that having access to that to help kind of build out their platform. So appreciate Aparna joining us. She's Chief Revenue Officer of Business Markets and SaaS over at Verizon Business.
Hey, let's get a check on the latest world and national news with Amy Morris in the Bloomberg 99.1 newsroom in Washington, D.C. Hey, Amy.
Hi, Tim. UK Prime Minister Rishi Sunak calling for a general election this summer.
These uncertain times call for a clear plan and bold action to chart a course to a secure future. You must choose in this election who has that plan.
The move by Sunak is a gamble on an earlier-than-expected vote, with his Conservative Party trailing far behind the opposition Labour Party in opinion polls. Half of swing state voters say they are worried about violence surrounding the U.S. presidential election. The latest Bloomberg News Morning Consult poll finds roughly equal shares of Democrats and Republicans hold that fear, and it's even more common among independents. We get more with Bloomberg News national politics reporter Gregory Cordy.
There's a lot of concern that if the other half of the country doesn't get its way, there could be violence, but also fears about misinformation, disinformation, foreign interference, election fraud. It's just sort of reflective of going into a very contentious and polarizing presidential election.
Bloomberg's Greg Cordy. Meanwhile, the poll also shows President Biden gaining some ground across the 7 swing states. He now trails former President Trump by 4 points in those states. The Republican National Committee's Washington headquarters had to be evacuated this morning. Police were investigating 2 vials of blood that had been addressed to former President Trump. Capitol Police say hazardous materials teams were called in. It is not clear if anyone came into contact with the blood, and they don't know who it belongs to. Daily and near-daily marijuana use is now more common than ever, rather than similar levels of drinking in the U.S. The study's author, Jonathan Calkins at Carnegie Mellon University, says alcohol is more widely used, but in 2022, it was the first time this intensive level of marijuana use overtook high-frequency drinking. Global news 24 hours a day, whenever you want it, with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
3:40 on Wall Street. We do check markets all day long here at Bloomberg. Stocks lower across the board as we await the latest numbers out of NVIDIA. And this update brought to you by MassMutual, a leader in wealth management, offering financial advisors the best of both worlds with resources to help you run your business and the freedom to run it your way. Learn more at massmutual.com/wealth. And now let's head over to the First Word breaking news desk for today's afternoon call. And here's Bill Maloney.
And good afternoon, Charlie. That's right. U.S. stocks are in the red ahead of the NVIDIA earnings. Dow's currently down 227 points. S&P's dropped 20, and NASDAQ is lower by 0.3%. The U.S. 10-year yield at 4.43%. Gold is lower by 21. Oil trading in the red. And Bitcoin, that's down by 0.4%. Among the main 11 S&P sectors, only healthcare and industrials were in the green. Energy and materials were under pressure. And leaders to the upside in the Dow, J&J and Cisco, while Dow Inc. and Goldman Sachs led to the downside. After earnings, Toll Brothers fell 8%, while analog devices rose 9.7%. And in other news, the Fed said some members are willing to tighten more if needed. Wrapping things up, NVIDIA and Snowflake report after the bell. Live from the First Breaking News Desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much. We got you covered on both. And to hear live breaking news over your Bloomberg, type squawk, SQUA, on your Bloomberg terminal. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, everybody, just under 18 minutes to go until we ring the closing bell on Wall Street. And, of course, a little bit longer than that till we get to about 38 minutes until we get to NVIDIA earnings. Having said that, we did get some Fed minutes. And so we've been thinking a lot about the economy, where monetary policy goes, what happens to the Treasury curve. So we've got a perfect guest for you. Let's get to it. Dr. Katie Kaminsky is back with us. She's Chief Research Strategist and Portfolio Manager at Alpha Simplex Group. She is with us from Cambridge, Massachusetts. How are you?
Good. I mean, it's a little bit of a red day for a lot of people out here today, but otherwise it's a good day.
I mean, those days have to come every once in a while. They can't be green every day, Katie.
All right. Wait, was there anything from the Fed minutes that you found interesting and kind of relevant to your world?
I mean, I think the thing that's the most interesting is we keep seeing this wait and see narrative, and it's not wavering. And so I think that of course gives people pause. And, you see stocks and bonds down today as a result. And you also saw UK inflation not really doing much for us either. So I think the story is still there. Let's keep waiting.
Well, is there a point when wait and see just becomes the norm, and it meaning that this is it, folks, and it doesn't get any better? I mean, you continue, I think I'm looking at some Bloomberg stories just over the last week or so. You continue to believe that we are far from declaring the inflation fight from being over. So I'm just wondering, is this maybe as good as it gets in terms of inflation? I don't know. Where are you thinking about this?
This is a really good question. And honestly, the signals that we have been seeing all spring, and I guess into summer now soon, have really been consistent with this idea that inflation is not really going anywhere yet. And when you look at stocks and bonds and how they're trading, even taking today, they're still trading with positive correlation. You're seeing that stocks and bonds down on the same day. You're also seeing signals in yield still consistently short. And you're seeing a very, very bipolarized positioning from a technical perspective that suggests that the market is still moving in this higher for longer, wait and see kind of environment. And we haven't seen any indication of that changing at any time soon. So I think time is going to take longer than a lot of people think for this to move ahead.
What do you think, though?
Don't say data dependent there, Katie.
I think, no, I'd say it's, okay, now I'm going to say it's data dependent because you said that.
It's okay. It's okay.
Yeah, I do think that the real challenge out there is that until we can actually see inflation at a lower level, that puts a lot of pressure on whether or not we can see any cuts. And if we're going to see cuts, that could be kind of a strange scenario in history that you don't have inflation down and then we have cuts. So I kind of think that they're leaning more towards we don't want to do something that might be the wrong choice. As a result, we're not seeing enough evidence that things are restrictive. So restrictive may become where we are now, may become the norm until we see otherwise. So I'd rather wait and see than see otherwise. I don't know how you feel, but that's definitely my camp is I'd rather wait and see.
Well,
Tim's
been making fun of me because yesterday I did like
the countdown is on
to the blackout by the Fed speakers.
I think we're 10 days away.
10 days away and counting, folks. And then it's a little bit more until the next Fed meeting. Tack on a few more days to that. I don't know. It is kind of this funny little like world we are in. And, you know, we were kind of excited when somebody said NVIDIA has taken over. What's the most important thing, right?
Yeah,
In terms
Jay Powell, at least right now, is sort of the
now.
most important thing to watch. I mean, we'll see what happens today, Carol, but
it was
no
exciting.
question the Fed is still front and center.
Yeah, but it was excited for someone to say, no, NVIDIA is really what matters right now. I don't know, Katie, in your world, when I think about the 10-year, right, we always like remind you when you were talking about 6% on the 10-year. Have we topped out when it comes to, what am I looking at, a 10-year today that is at what, 442? Have we, what's the top for you right now? Do you have a range right now?
I think that people are still really seeing 5% as the sort of peak point. We're still really focused on, you hit that last year. The question is really going to be what you see with inflation. I think a lot of people are underestimating upside risk there. If we started to see the things that have really made me nervous, although today that's the total opposite, is copper prices, gold prices, commodity prices have moved a lot throughout the spring. And I think that made me very nervous about this idea that everything was just going to sort of go back to normal quickly, that it was going to take time. So you could see higher rates, especially if we see a policy issue in terms of we cut rates and then inflation spikes. I think that's a scenario that nobody wants. That's why I'm not ever giving up on the 6% at some point, but you know, maybe I just need a longer window.
What about a window for, like, when you say 5% is the range right now, does that mean we return to 5% in the near future, or us touching 5% last fall was the top?
Well, we definitely got a little head fake towards that recently, as you know, in April, and that was just basically on slightly worse CPI than people would have liked. And so imagine what could happen if you actually saw CPI even higher, or sort of indications that, you know, we had more upside risk in inflation. So inflation has the ability to move rates significantly. So I'm definitely not, you know, completely downplaying that. I think we have to watch what happens with inflation, and we have to kind of accept that bonds and yields may be higher for longer, and that has real implications for investment.
You know, we had a couple of alerts today. One, in ex-Apollo Partners seeing cracks emerging in the private credit boom. I think Mike McKee said that private credit came up on in the Fed minutes. You know, just when we think we figured out all the things to worry about, something hits us, you know, from behind, and we are caught off guard, Katie. There are things out there, maybe it's private credit, I don't know, that could certainly upend everything and change the dynamics here, certainly for what the Fed might need to do.
Oh, definitely. And I think that's the challenge. Is, I mean, let's take the, you know, corporate housing as an example. Like all of these sectors, we've been worried about them for quite some time with higher rates. And I think the real question is what doesn't work in this environment? What breaks? And I think we're all looking for that, but until we actually see ex post, it's going to be hard to know. I mean, I know that housing sector came out with interesting data today, which is how low inventories are, but at the same time, like, the prices haven't gone down.
Right,
so,
exactly.
you know, where do we go from here? So I think a lot of people are looking for those cracks in some of the obvious places, but unfortunately, sometimes it's the less obvious places.
All right. Well, already looking forward to next time. Katie Be Well, Katie Kaminsky, Chief Research Strategist, Portfolio Manager of an Alpha Simplex Group, joining
news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. We are minutes away from the latest numbers out of NVIDIA. Vijay Rakesh is a senior analyst with Mizuho Securities USA.
Well, I think the big information will be the ramp of the new products, the pipeline, how the pipeline of that is building. And I think as you go into 2025, the key for NVIDIA is they move away from doing just GPUs and compute trays to full stack servers. And that is a huge price ASP boost for them. So 2025 will be even a bigger year than 2024. So I think the best is yet to come, as they say.
Mizuho's Vijay Rakesh, and again, we have got NVIDIA down now by 1%. Complete coverage as the number breaks on Bloomberg Television and Radio. This report will give investors fresh insights into an AI spending boom fueled by the world's largest technology companies. Again, ahead of earnings, NVIDIA down now by 1%. BuzzFeed shares are surging 20%. After entrepreneur and former presidential candidate Vivek Ramaswamy reported a stake in the online media company and asked for talks with the board. Again, BuzzFeed up now by 20%. Anglo American has agreed to enter talks with larger rival BHP Group after rejecting a third proposal worth about $49 billion, opening the door for the first time to what would be the biggest mining deal in over a decade. We've got Anglo American down, little change, down less than 0.1%. BHP, though, down by 4.7%. Again, recapping, we've got the Dow, the S&P, NASDAQ, all in the red. Those are some of our top company stories, and this is Bloomberg.
This is Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio and Television.
All right, everybody, just under 5 minutes left in today's trading session, so getting ready to head over to our TV colleagues, count you down to the close, and then in about 20 minutes, 25 minutes, we should have NVIDIA earnings, so we will break them down as they cross the Bloomberg terminal. In the meantime, we touched on this a little bit in our last segment with Katie Kaminsky, but this is among our most read stories, Tim, right now on the Bloomberg terminal.
It's all about Goldman Sachs CEO David Solomon and the path for rate cuts. He said he currently expects the Fed will not cut interest rates this year amid an economy that's proved more resilient thanks to government spending. He was at an event hosted by Boston College. Here's what he said a little earlier. I still don't see the data that's compelling to see we're going to cut rates. He added that he's currently predicting 0 cuts. Investments in AI infrastructure have also helped the economy be more resilient to the Fed's monetary tightening, he said.
This is, things that people have pointed out, certainly, that there's still a fair amount of money moving around in this economy, being pumped into the economy, whether it's, leftover still from the pandemic, but some of the spending bills that have come out of the federal government, including what we just talked about earlier, the renewable side, the, clean energy, green energy side. There's a lot of money going in there, but it's infrastructure spending. That's money that is being put to work, and that certainly leads to activity and essentially can lead to either keeping a floor under inflation or even putting some pressure. David Solomon of Goldman, though, did say still the consumer is starting to feel the pinch from higher prices. He pointed to recent earnings from McDonald's, AutoZone as evidence that consumers are starting to curb spending. And we see that.
Look at Target today.
Exactly.
But at the same
TJX
time,
on the other side, people looking for a bargain.
Yeah, that's a really good point. Here's what he said. If you're talking to CEOs that are running businesses that really deal with what I'll call the middle of the American economy, those businesses have been starting to see change in consumer behaviors. Inflation is not just nominal, it's cumulative. And so everything is more expensive. You're starting to see the consumer, the average American, feel this. Did I tell you about the battery story?
What?
I was in Colorado a few weeks ago, and I went to buy a specialty battery.
Yeah.
And I was at the hardware store.
Yeah.
And I said, okay, here's where the batteries are. And there were 2 guys in the aisle just complaining about how the prices have doubled in the last 3.5 years.
Yeah, I think people are looking at it and saying, do I really need this, or is there another place I can go where I can get a better deal?
And we're talking batteries that are like, $3.50 for a pack.
But,
for $5.
It all adds up, right?
Yeah.
And especially depending on what your household income is.
Exactly.
All right, everybody, do not forget NVIDIA, of course, coming out after the closing bell. Tim and I will be breaking that down. But right now, we're heading over to our TV colleagues. That's because Beyond the Bell starts right now.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic alongside Alex Steele. We're counting you down to the closing bell. And here to help take us beyond the bell, it's a global simulcast, joined now by Scarlett Fu here in the TV studio, in the radio booth, Carol Masser and Tim Stenovic, as we parse all the crucial moments of the day. But who are we kidding? We're really going to parse the crucial moments that come after the bell, and that includes some big earnings, Carol, out of VF Corp, Elf Beauty, and Snowflake.
Yeah, exactly, man. Those are so important. And then there's this other one we might get to if we have time, NVIDIA.
Oh, I've heard of them.
Yeah, exactly. Listen, the expectations are high. We're going to see, we've had all these stories about that. There isn't enough supply to meet demand. The numbers, the metrics, the margins, this is going to be important. And the outlook, we were talking to our own Ian King, that's going to be important.
Okay, the outlook, the revenue estimate, $26.82 billion. This is the one that I'm focused on. Adjusted gross margin estimate. Scarlett, 75.6%.
Yeah, that's something.
That is just incredible. Yeah.
Ian shared with us, we asked for context around that number. He shared with us, for context, at the peak of Intel, when it owned the entire server market, it was in the 60%, in the 60s.
Low 60s, right?
Low 60s.
Yeah, that is just remarkable.
Incredible.
I wonder if that changes when Blackwell really comes into its own. Let's not forget, too, that the Fed is part of the trading day today because it's rare that Fed minutes actually move the market, but I feel like we've been in a holding pattern for so long now, basically a week, waiting for NVIDIA, but we've been keying off Fed speak and the Fed minutes out of sheer boredom.
Yep. Many question whether policy was restricted enough. I think that tells you a lot.
All right, we get the closing bells here in New York on this Wednesday afternoon. The Dow Jones Industrial Average, the S&P and the NASDAQ all in the red here on the day, with the Dow down more than 200 points or about 0.5%. The S&P lower by about 14 points or so, or roughly about 0.25 percentage point. The NASDAQ down 31 points or 0.2%. The Russell also in the red here on the day, and that is your biggest laggard, at least among the big indexes, down about 0.8%.
All right, guys, just going to draw your attention to one sector. Solar stocks, man, they were just soaring in today's session. The Invesco Solar ETF up about 9% in today's session. UBS, a positive note today. New tariffs on Chinese solar panels and surging power demand. Overall, Scarlett, definitely playing into that factor. I'm going to have one of those among my gainers today.
Yeah, the ticker is the best, right? TAN.
Yep.
It just, whoever invented that, genius. Okay, let's take a look at the sector performances there. There is a lot of green on that pie, but that's mainly because the tech sector finished barely higher, up 0.1%. In fact, only 3 sectors finishing in the green: healthcare, industrials, and tech, but just barely. Your big laggards are energy, utilities, and materials, off by at least 1%.
All right, guys, we did get some retail. We are in the midst of retail earnings. TJX companies, way off its highs of the session when it was up more than 7%, but finishing the day with about a 3.5% gain. Did hit a record high, though. It boosted its earnings per share forecast for the full year. First quarter results better than many expected. That was according to Citi, but nonetheless, investors like that one. BuzzFeed, thank you, Tim. He said you got to do this one. Up 82% at its highs, finishing the day with a 20% gain. Mind you, it is a $3 stock, so any little dollar move or money move can be a lot percentage-wise. Soaring, though, after the entrepreneur and former U.S. presidential candidate Vivek Ramaswamy reported a stake in the company. Asked for talks with the board. His stake, 7.7% in BuzzFeed, worth about $6.8 million based on yesterday's closing price, so we have to finish and do some math. But nonetheless, this would make him the 4th largest shareholder in BuzzFeed. So that was kind of an interesting story play. It is a $3.01 stock. For solar, I said solar outperformer. This is your number one gainer in the S&P 500 today, finishing up almost 19%. Yesterday, UBS raising its price target to $270 from $252. Stock closed just under $252 today. So there's optimism. There's some major macro efforts certainly going underway that are helping out some of the solar name. And I had to mention Moderna because this was a top performer in both the S&P and NASDAQ 100. More momentum in this name, finishing today with a gain of almost 14%. It's up something like 60% year to date, on track for, I think, a record streak of gains, which might have been today. I think it might be 8 in a row here. But nonetheless, they did announce some data that they're going to present at the 2024 ASCO, but I couldn't find any really other specific mover. But nonetheless, a lot of momentum on this play.
All right, you got the gainers, Carol. I'm going to go to the decliners. I do want to start with Target, to look at the retail space. We got earnings from the company this morning. Shares tumbling the most going back to November of 2022, falling 8% today. This after the company came out and they kind of sounded this note of caution when it came to discretionary spending in the coming months and with regard to its turnaround effort. Comp sales fell for the fourth consecutive quarter and declined 3.7% for the quarter through early May. That was in line with what Wall Street was estimating. Digital sales did help to moderate the drop, while brick and mortar comp store sales missed forecasts as attributed to a decline in traffic. Also, did you see what happened to shares of Lululemon, falling today by more than 7%? Shares are actually down more than 41% so far this year. They hit a 52-week low today, although they're the lowest since going back to March of 2023. This all because the company said its chief product officer, Sun Cho, was leaving, raised concerns among analysts that the athleisure brand was losing its edge. She will not actually be replaced. It's part of a bigger organizational reorg. Her responsibilities for product design are going to move to the company's global creative director. This according to a statement from Lululemon. And then for an honorable mention, NVIDIA shares. I do want to take a look at how they finished the day, down about half a percentage point. They are higher by 91% so far this year. Really, it's just an excuse for me to talk about them ahead of earnings. Watching the most important number, the second quarter outlook, that revenue number, $26.82 billion, and then adjusted operating expenses estimate of $2.64 billion, adjusted gross margin estimate of $75.6 billion. The revenue estimate for the year should be, according to analyst estimates, about $113.83 billion. Those numbers expected around 4:20 Wall Street time.
That's a lot of money. It's fair to say.
It's so much money.
Making a lot of money.
It's near records right now, up 91% so far this year,
Yeah.
Alex.
I'm taking a look at the bond market because it did actually move, particularly on the front end. We're seeing some selling yields up by about 4 basis points, a touch of buying coming in the back end. You did have a 20-year auction that went well despite any sort of rally into the numbers. And then you also had the Fed minutes. Many questioned whether policy was restricted enough, and various were willing to tighten more if need be. Plus, David Solomon of Goldman Sachs saying at Boston College that he doesn't see that the data is that compelling that we're going to have to cut rates. So the higher for longer narrative, but then taking a little bit a step further here. Like if policy is not restrictive, kind of then what?
All right, everybody, and we do have some earnings, it looks like, just crossing the Bloomberg terminal. Let me just pull it up on the terminal. We're talking about Snowflake just crossing first quarter adjusted diluted EPS. We're looking at 14 cents a share, so that's a nickel shy of the street estimate of 19 cents a share. But what's interesting, let's go to the outlook, because it says it sees second quarter product revenue, $805 million to $810 million. That is above street estimates of $787.5 million. And Romaine, we are already seeing this name popping in the aftermarket. It's up about 12%, down about 18% year to date. But again, another one of those software companies, but nonetheless, investors liking what they're seeing
and
on the outlook.
Yeah, absolutely. And a software company, we should point out, that has benefited from AI. When you talk about just kind of the reimagining of these data centers, and they've been integral to that. It's kind of one of those kind of second-tier AI names that doesn't get talked about much, but we'll see. I mean, I'm going to dig a little bit deeper into the release to see how much, if at all, they're touting that.
All right, let's take a look at another company that just reported. We know it's the tail end of earnings season, so retailers are out in force. Here is an apparel and footwear company, VF Corp, right now. In terms of fourth quarter revenue, $2.37 billion, missing the mark here. Analysts were looking for $2.41 billion. So revenue missing analyst estimates. 2025 revenue seen growing 10%. I don't have a comparable, so we don't know if that's good or bad right off the bat. But right now, the initial read from investors is to push the stock down by 2.7%. This is not exactly a super liquid stock, so hard to say that we can read too much into it.
Big short too.
And just for you know, prosperity here, it's North Face, it's Vans, it's these kind of names. They're also in the middle of a restructuring,
the teenage boys brand
in the U.S.
I think it's interesting. I mean, I'm glad you brought up those brands, because I was looking through them. I mean, with the exception of North Face, I mean, they all had pretty significant declines on a year. I mean, 25% drop in Vans on their revenue side, 14 on Timberland, 15 on Dickies, and the North Face was up, but that was only by, what, 1% or 2%?
That's barely up.
Yeah, well, brand direct-to-consumer up 6%, but the North Face was down 5% with ongoing U.S. wholesale weakness. Vans down 26%. Largely consistent with the prior quarter, includes additional impact from deliberate actions to further right-size inventories in the wholesale channel, i.e. Put stuff on sale to get rid of the inventories that they have on back.
One other company I want to highlight here, guys, is Elf Beauty. That stock just getting creamed in post-market. We're looking at earnings that on a earnings adjusted per share basis came in above estimates, but their net sales also did. But it's really about their outlook. Their 2025 adjusted outlook came in below estimates, whether you're looking at revenue, whether you're looking at earnings or adjusted EBITDA. So they're missing for this year. This goes against my whole invest in your face thing. I guess invest in your face has struggles also.
I don't know. How's Sephora doing? I don't know.
I mean, maybe we're not shopping at Elf Beauty, but anyway, that's not getting hit pretty hard.
All right, right now, NVIDIA just up a hair in the aftermarket ahead of its earnings, just up about 0.2%. So we'll be breaking all of those numbers down in about 10 minutes time, I know, on both sides. That's a wrap, guys. Our cross-platform coverage, radio, TV, YouTube, Bloomberg Originals, Beyond the Bell. We'll see you again, same time, same place tomorrow.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenivek on Bloomberg Radio.
It is Bloomberg Business Week, and the Bloomberg Big Take today, also one of the most read stories on the Bloomberg terminal, about how, unlike his reform-era predecessors, Xi Jinping cannot count on rapid gains in prosperity to underpin support for Communist Party rule. So with the end of Chinese economic miracle, President Xi Jinping has a challenge that none of his predecessors faced: how to govern after the boom. Tom Orlik is chief economist for Bloomberg Economics. He joins us on Zoom from Washington, D.C. He was part of the team who reported and wrote this big take. He joins us from Washington, D.C. Okay, Tom, I want to kind of go off script a little bit before we get to exactly what you and the team wrote about when it comes to today's big take. Just give us, and all of our listeners and viewers, some context as to why you are uniquely positioned to write about this, given your experience.
Well, as you say, Tim, this was a really big team effort. Rebecca Chung-Wilkins led on the reporting, and we had reporters across China spanning out and asking big question to Chinese people: do you feel better off than you did a few years ago? To kind of take the mood on the Chinese street and think about what that means for China's economy and Chinese politics. Now, my personal contribution was to bring in some of the analysis, and one of the things I draw on as I do that is my time in China. I lived in China from 2007 to 2018, covering the Chinese economy from an analytic perspective.
And the economy has changed.
It's changed so much, Carol. When I arrived in China in 2007, the working age population was growing, so you had more and more workers. The real estate sector was booming, which is a big driver of growth. And China and America, I mean, they were never friends, but they were getting on, right? That trade relationship, that technology relationship was working. Fast forward to 2024, and of course, China's had some bad luck. Like the rest of the world, they had the COVID crisis to deal with, and that took a toll in China as it did here in the US and elsewhere. But they've also had a lot of those positive arrows turn into negative arrows. Working age population no longer growing, now shrinking, real estate turning from boom to bust. And of course, that relationship with the United States, well, as we see from the Biden administration, putting tariffs on EVs, tariffs on batteries, tariffs on solar panels, that relationship's not really working so well anymore either.
Well, and for Chinese citizens, as this Bloomberg Big Take notes, for many people across the country, it feels like a different world. What's interesting is, though, it also, this story notes, China doesn't have elections like we have in the United States, where we can say, we don't feel better. All right, President and your team, you're out. But China does have politics, and the political landscape has been one of basically the Chinese government, right? Wanting to keep the economy stable. And it's been easy to do that when it's a boom time, but it's kind of difficult or more difficult when it's not. The government's got to do something to make sure that people are happy.
Yeah, so the sort of the frame we put on this, Carol, is Ronald Reagan's famous question to US voters back in 1980. Are you better off than you were 4 years ago? And of course, back in 1980, the answer for many US voters was no. And that's why Jimmy Carter had to pack his bags and move out of the White House, and Ronald Reagan moved in. Now in China, for almost all of the last 40 years, if you'd asked most people in China, are you better off than you were a few years ago? They would have said yes. Incomes were rising fast, real estate values were rising fast. If you ask them now, the answer is, well, it's complicated. Average incomes are still going up, but at a much slower pace. And a lot of people in the tech sector, in the finance sector, in the real estate sector, they're actually seeing their incomes falling. A third of office workers in China, based on one survey, saw their incomes falling last year. And of course, the real estate crisis, well, that has hammered wealth. So Chinese households, which at almost any other point in the reform era were always feeling better off, always feeling pretty good, and that providing an underpinning for Communist Party rule, well, many of them not feeling so good anymore.
Well, help us, Tom, understand the consequences of this post-boom economy, especially for the Chinese Communist Party and President Xi Jinping, because it's not like every 4 years, you know, they're going to the polls in the same way that we are familiar with here in the U.S., or every 2 years, rather, for Congress.
Yeah, so, I mean, the way a lot of political scientists think about this, Tim, is that there's a kind of implicit social contract in China. The Chinese people say, if you give us growth, if you make us more prosperous, we're going to relinquish our say in how we're governed, right? Now, if that's what's going on for the last 40 years, well, that contract today is fraying a little bit, right? So the question is, how does China's government, how does China's Communist Party address that? I see kind of 3 planks to their strategy. The first one is stimulate. China has not got out the stimulus bazooka, but it has got out a bunch of stimulus water pistols, and it's using them to kind of douse the flames in the real estate sector. The second is the pie's growing more slowly, so they're paying more attention to how it's shared out. That's Xi Jinping's common prosperity agenda, making sure that when growth is slower, everyone's getting at least a little piece of it. And the third piece of it is that the space for kind of dissent, the space for different views within China is really narrowed. Under Jiang Zemin, entrepreneurs were welcomed into the Communist Party.
Right.
Under the current administration, they're not having such a good time.
So what about in terms of the real estate side of things and the real estate bubble? You know, it looks like the government, I feel like over the last week or so, has really tried to make efforts and working with banks, if you will, in China to really help out that sector. Is it moving the needle? Is this something significant? I'm curious what your read is on that, and how that helps and change maybe the plight or the economic outlook for Chinese citizens.
So China's got a really serious structural problem with real estate. They built way too much real estate, and now they're in the middle of a painful correction as supply comes back into line with demand. I mean, that's the kind of fundamental picture, and there's really nothing the government can do to kind of change that. What they can do, and what they seem to be doing a bit more aggressively now, is introduce policies to kind of ease that transition, right? So we've seen mortgage rates coming down. We've seen the Politburo committing to further lowering interest rates. We've seen down payment requirements come down. All of that is intended to stoke demand in the real estate sector. The big thing which has happened is that the central government has sent some signals that it's thinking about financing a big purchase of unsold property, potentially spending trillions of yuan to do that. Now, that's not going to make the oversupply problem go away.
Right.
But it's a bit more stimulus than I think people were expecting a few weeks ago.
Yeah.
So relative to expectations, a little bit of a positive arrow on China's real estate, potentially in the next few months.
Well, it's a great piece. Everybody should check it out. It's among the most read on the Bloomberg terminal. As we mentioned, Tom Orlick just a member of the team that did work on this, including Rebecca Chung-Wilkins, as well as many reporters around the globe. It's today's big take. It's among the most read on the Bloomberg terminal.
Second largest economy in the world.
Are you better off asking Reagan's question on Xi's China?
I love it, right?
So good.
It's why we always talk about China and what's going on. It's really, really important to globally what happens. So looking forward to it. Hey, NVIDIA shares just up a hair. Earnings maybe about 2 minutes away. So we're going to break them down right here on Business Week.
This is breaking news from Bloomberg.
From Bloomberg World Headquarters, I'm Charlie Pellet. NVIDIA ripping higher after earnings, up now by 4.7%, announcing a 10-for-1 forward stock split. NVIDIA's first quarter data center revenue closely watched, $22.6 billion. Estimates, $21.13 billion. Also sees second quarter revenue, $28 billion, plus or minus 2%. Estimates, 26.8%. So again, big news, important headlines crossing the Bloomberg Professional right now. NVIDIA announcing that 10-for-1 forward split. First quarter data center revenue, $22.6 billion, estimates $21.13 billion. Our coverage of NVIDIA will continue in just a moment. Briefly, S&P down 14 today, drop there of 0.3%. The Dow down 0.5%. NASDAQ today down 0.2, 10-year yield 4.42%, and the 2-year 4.87%. Bloomberg Business Week continues, and so does our coverage of NVIDIA. Once again, Carol Messer and Tim Stenevik.
All right. Thank you so much, Charlie. Let's get through it, guys. We got a bunch of numbers, and we do have the stock. Shares of NVIDIA up about 4% in the after hours. The big things, announcing a 10-for-1 forward stock split. And to the outlook, we talked with our Ian King. This is going to be important. See second quarter revenue, $28 billion plus or minus 2%. The estimate is $26.8 billion. Remember, though, the whisper number that Ian mentioned was about $30 billion or above $30 billion on the street.
Some analysts run the range. We're saying up to $30 billion.
But it's interesting.
Still, higher than the consensus.
Absolutely. But you know it can be funny with that. First quarter data revenue, this is important. This is the bulk of their business, right? $22.6 billion. That is above street estimates of $21.13 billion. Gaming revenue, much smaller part of the business. First quarter gaming revenue, that was pretty much in line, $2.6 billion. The estimate was for $2.62 billion. And again, the company boosting the quarterly cash dividend to 10 cents a share from 4 cents a share. So really paying back all of that cash that they've been generating, a lot of it, right, giving it back to investors.
The shares up right now about 4.4%. They climbed as much as 5.1% after that second quarter revenue outlook topped estimates. You heard the numbers, too, there about its data center business. It did well in the fiscal first quarter. Revenues came in at $22.6 billion. They were above the data center consensus of $21.13. And then, of course, that 10-for-1 forward stock split. Huge news.
Well, and you something you focused on earlier. Adjusted gross margin for the first quarter, 78.9% versus 66.8% year over year. The estimate on the street was 77%, so that's coming in higher than forecast. R&D expenses, $2.72 billion. That is up 45% year over year. The estimate was for $2.73 billion, so a little bit lower. For the full year, gross margins are expected to be in the mid 70% range. Full year operating expenses are expected to grow in the low 40% range. So we're getting some view and some thoughts in terms of the outlook. Right now, we've got shares of NVIDIA. They're up 4.4% in the after hour, and the company says it's poised for their next wave of growth.
Ian King writing on the live blog right now that the $28 billion revenue forecast solidly above the consensus estimate, but as you mentioned, Carol, not as wildly optimistic as some projections, which had ranged to more than $30 billion. Stock splits, Ian adds, in NVIDIA's case, a 10-for-1 exchange are usually done by companies to keep their shares affordable by as many investors as possible. This one, Ian notes, is going to come into effect in a little less than a month, that on June 7th. You could argue, though, that stock splits don't matter as much anymore because you can just buy fractional shares very easily.
That's a good point. All right, so let's get to it. Let's get some analysis on this report. Dan Morgan is with us, Senior Portfolio Manager at Synovus Trust Company, joining us from Atlanta. Also, Kujan Sobhani, Bloomberg Intelligence Senior Semiconductor Analyst. Dan, let's start with you. Your initial thoughts on the release.
Hi, Tim. Hi, Carol. Quite frankly, I thought it was a fantastic quarter. I mean, Ian King, who I know very well, mentioned a whisper number at $30 billion in revenues. I was hearing more close to $26 billion. So obviously they, came in above that, 26.08. The beat in data center is really important. Obviously, it came in at $22.6 billion. That was a beat. And Carol and Tim, heading into this report, we had a lot of people out there who were very concerned that there would be some sort of like air pocket between ordering patterns with the current chips that they're shipping, which are the Hopper series, and that there'd be some large customers that would hold off and wait until the new Blackwell series was introduced sometime this fall, and then we would get some sort of slower period in growth in terms of data center revenues. And there really is no indication of that on this current quarter. So hopefully this quarter will be able to answer back to some of those worries. And I thought across the board, and quite frankly, guys, a 10-for-1 stock split is absolutely huge because like Amazon and Google, when they both did 20-for-1 stock splits, it really allows the retail investor to participate more in terms of buying more shares. And it's a psychological thing, but it does boost the stock.
Hey, I just saw also one eye-popping number, free cash flow. Maybe this is why they're doing that dividend and so on. Free cash flow, $14.94 billion versus $2.64 billion year over year. The estimate is for $12.29 billion. So yeah, generating some nice
still
cash.
Looking really good. I want to bring in Kunjan Sabani, Bloomberg Intelligence Senior Semiconductor Analyst. Kunjan, just build on what we heard from Dan Morgan there. Is there anything in this most recent report from NVIDIA that investors shouldn't love?
I mean, look, the dividend increase is massive, more than 100%, and the stock split, I think not a negative, but the expectation was for a sort of low double-digit, at least beat on both the print and the guide. We didn't see that. This one, for the past many quarters, we have seen beats and raises in that range. So in the absence of the dividend increase and the stock split, we could have seen some more volatility here because, again, it was good, but not as good as people expect. But I think in the call, the dividend, free cash flow, and the stock split will be center stage.
Well, Kunjan, I do wonder, is there anything in it that makes us like reset our think and enthusiasm as investors that we have seen when it comes to kind of the AI investment story? Because NVIDIA, obviously, the linchpin, if you will, to so much of it when we talk about AI, right? If you're going to do AI, you need NVIDIA chips. So is there anything in this report that makes you rethink the expectations about the impact of AI, Gen AI, and all that it might bring, and also as an investment story?
Not really. You know, from a long-term perspective, the fundamentals remain intact. The story remain intact. We were expecting some kind of, some folks are calling it the air pocket in this next quarter and the quarter coming in October is just a temporary timing situation where the new Blackwell chip starts ramping, and before that, customers want to wait for that. So what you might see, and we are seeing, a sort of moderating sequential growth, but I don't think that should lead to any concerns whether this AI rally has legs or not.
Jensen Huang, in the press release, of course, the founder and CEO of NVIDIA, saying our data center growth was fueled by strong and accelerating demand for generative AI training and inference on the Hopper platform. Beyond cloud service providers, generative AI has expanded to consumer internet companies and enterprise, sovereign AI, automotive, and healthcare customers, creating multiple multi-billion-dollar vertical markets. So Dan Morgan, I mean, what are you hearing in terms of channel checks? Jensen Huang, no surprise, he's going to be all in. This is his bread and butter, but it does sound like it's broadening out in terms of the demand, everyone trying to figure out what their AI play is for their business.
You're right, Carol, and if you look at kind of going back to that pocket issue, coming into this quarter, estimates were that the Hopper 100 chip had about a 10-day or 10-week lag time between order periods, so there's still some slight overage of orders in that, and they're trying to meet that. But you're right, Carol and Tim, it looks like we're spilling over. We've been following this stock together, it seems like, for 5 or 6 years on the radio show, and we've gone from a gaming company to a data center company, and now we're seeing it going from the data center into these other areas.
There was a little crypto mining in there, too.
Which is just unimaginable. I'm sorry, Tim.
There was a little crypto mining in there, too, during that time, Dan.
Yeah, we had some crypto mining going there for a while, too, but it's just amazing, Tim and Carol, that, before it was really a data center story using GPU chips in terms of AI. And now, like you mentioned in the press release, it's now spilling over into all aspects of different industries. So it just increases the amount of potential customers just beyond the big data center users that we keep talking about, like AWS and GCP and Azure. And it just becomes a bigger and bigger story.
Well, it raises the question, Kunjan, that I've had for months at this point, which is the whole basic thesis of successful companies that are building something at high margin. And if they're the only ones doing it, then there's something wrong with it, or they at least have like an incredible moat. And I'm wondering how long NVIDIA can keep doing this. I mean, they've got first quarter adjusted gross margin of 78.9%. Estimates were for 77%. How long can NVIDIA keep doing this before a competitor is able to build something similar or catch up?
I don't have an answer for how long, but I will, before the Blackwell announcement, before GTC, this was the exact questions we were getting a lot. And the question was like, after H100s or H200, will the next chip be competitive and provide a lot more value that they can continue demanding such premium? And the Blackwell is showing that, yes, in terms of performance increases, in terms of TCO for their customers, it came out and beat every other product or the wannabe products in the street, and hence that is going to command even more premium. So I think as long as they can keep on out-competing themselves and their peers, they should be able to command this premium.
So NVIDIA shares, just to rehash, they're off their highs in the aftermarket, but still up about 2.7% as we speak. And just to kind of go over some of the headlines that did cross just moments ago, again, NVIDIA giving a strong forecast on sustained AI momentum specifically. Just going through some of the numbers here, boosting its quarterly cash dividend to 10 cents a share from 4 cents a share. We talked about that 10-for-1 forward stock split. Again, data center revenue for the first quarter, the past quarter, $22.6 billion. That's a beat. $21.13 billion was the estimate. And then the outlook sees second quarter revenue, $28 billion plus or minus 2%. And the estimate on the street is below that at $26.8 billion. So Dan, like, where do we go here from in terms of NVIDIA? Does it kind of make sense based on the spending that we heard from the likes of, Alphabet? I feel like Microsoft, was it Apple, was it Meta? Like they all kind of talked about, right, cap spend when it comes to AI specifically. So the enthusiasm maybe we've heard through the earnings season from some of the big tech players, does it match up with what we got from NVIDIA?
I think so, Carol. The estimate going into fiscal year 2024, if we were to take Meta, Microsoft, Amazon, and Google and combine their CapEx that they're mostly dedicating towards AI, you're looking at about $185 billion. So it's a huge number. And most of them have very healthy CapEx expectations going into this year. And of course, everyone's scrambling to outdo each other in terms of AI initiatives. So Carol and Tim, this report just keeps reiterating the amount of spending that's going into this. And of course, NVIDIA's are kind of waiting with their catcher's mitt, catching a large portion of it. So I don't see any changes right now based on the CapEx guidance that we got at the beginning of the first quarter from the big tech names. And then NVIDIA coming in with this beat. And then also strong guidance for the second quarter of 25. They did come in above expectations. So maybe that'll put to bed some of these worries about this transition that we talked about between Hopper and Blackwell as we move into the fall quarter. And you would expect those quarters to be huge in anticipation of the fact that they'll have a new product cycle going and starting to ship the new Blackwell. So to me, everything's operating on all cylinders right now for NVIDIA.
Hey, Kunjan, before we let you go, 25 minutes to go until the call starts for NVIDIA shareholders, investors, and of course analysts as well, like yourself. What's the question that you'd want to ask on the call today?
Yeah, so a couple of things, just again, going through the press release right now. One key thing we noticed this time was that the cloud customers are now somewhere between mid-40s. Until last quarter, they have been above 50% of the data center revenue. So that is interesting. We think in terms of long-term, that's a positive because we do want that cloud concentration to moderate along with revenue growth. So that could be a long-term positive. We'll have to get more details on what drove that. Was it just the cloud customers are going with more of their own ASICs? So that would be something important that we are going to look out for.
All right, great. And so off to the call we go. All right, shares of NVIDIA right now, though, up about 2.4% here in the aftermarket. Our thanks to our Kunjan Sabani, Bloomberg Intelligence Senior Semiconductor Analyst. Will be watching out for his research into the Thursday trade. Dan Morgan also watching out for his research as now that we've got all the details, if you will, from NVIDIA. He, of course, Senior Portfolio Manager at Synovus Trust Company.
A big thank you to both of them. Coming up next on Bloomberg Business Week, we're joined by the author of a new book all about sailing. The book called Sailing Alone, A Surprising History of Isolation and Survival at Sea. Richard King.
It can also be fun. So that sounds so dismal, but it's really, it can be kind of cool.
Carol's pretty excited about this one, and so am I. Hey, first up before that, though, let's get a check on the trading day and some other business stories, including NVIDIA. Here's Charlie Pellet.
I thank you very much. And right now, just let's reset on NVIDIA, because this stock is higher after hours. Right now, NVIDIA up by 2.4%. It delivered forecasts that many consider way better than expected. The chipmaker at the center of the artificial intelligence boom, out with another bullish sales forecast showing that spending on AI computing remains strong. NVIDIA said second quarter revenue will be about $28 billion. Analysts on average have predicted $26.8 billion. So again, after hours, we do have NVIDIA shares advancing. Right now, NVIDIA up by 2.6%. Turned out to be a down day ahead of NVIDIA's news. S&P today down 14, dropped there of 0.3%, 5307 on the S&P 500 index. Dow Industrials today down 202, dropped there of 0.5%. Nasdaq down 31, a drop there of 0.2%. 10-year 4.42%, with the 2-year 4.87%. Gold down 1.7%. Gold 23.78 the ounce, and West Texas Intermediate crude down 1.7%, 77.31 a barrel on crude. So again, recapping, NVIDIA shares are advancing after hours, up now by 2.4%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, so my husband and I are sailors. You guys probably know that. I talk about it a lot, I know. But we have been for over 30 years, and some of our favorite moments are being out on the water. No one's around us for what seems like miles. However, coastlines and land is often still in sight. Neither of us have done serious offshore sailing or crossed an ocean alone, something that many others have done.
Not yet.
Yeah, that's right. We still have time. It is those solo sailors, both men and women, who have ventured out single-handed, that really know what it's like to be truly alone out on the ocean, and often for days, Tim.
Our next guest has crossed the Atlantic in his 28-foot sloop Fox. Richard King writes about it, weaving his journey through those of other sailors who have sailed out of sight of land and alone. It's all Carol in his new book, Sailing Alone, A Surprising History of Isolation and Survival at Sea.
All right, Richard, needless to say, this has been a fun thing, and I've been looking forward to it. My producer, Paul Brennan, was like, you gave me the book a while ago, so it's been fun. We've been counting down the days to you. Welcome, welcome, welcome. Tell us about, first of all, you are a sailor. You've gone at it alone on a boat across the ocean. But tell us why you wanted to kind of put this together, tell your story, but also tell the story of many other sailors who've done that as well.
Sure, and thanks a lot, Carol and Tim, for having me on. And Carol, look forward to hearing about your adventures. I sailed by myself in 2007 across the Atlantic, and I definitely don't see myself as a super sailor. It was a little bit of a bungling affair, and in some ways, going out of sight of land, off the coast is easier, right? There's less to hit and less to keep track of. But I did it for a couple different reasons, and that was one of the things that I explore in this book. I'm really telling the history of people that have gone to sea by themselves and crossed oceans by themselves since at least the early 1700s. And all the way up to today. And so I was trying to explore, why did people go? Why would they go? And then also what they saw out there, just like you did in that intro, Carol, what is it like to be out at sea by yourself on a quiet boat, really close to the surface, day after day, and really getting that connection to the ocean world.
Well, and I love that, the book about, why they go, what they see. So when you took your trip across the Atlantic on Fox, your 28-foot sloop, why did you go specifically, and what did you see?
Yeah, I was in graduate school at the time, and I studied literature of the sea. I'm actually more of a scholar than, a sailor. And I'd spend so much time reading about these experiences. And I was like, maybe I could do that. And So I'm really proud of sort of the logistics of the voyage, not necessarily the execution, but I did make it. And, some of the things that I saw out there was just a really close connection with some of the seabirds, particularly storm petrels. I had one moment, which many of the listeners will sort of connect with, where I was fishing off the back of the boat and I saw a fin coming behind me, a really large dorsal fin, and I kind of freaked out. I was like, oh my gosh, Jaws is going to leap right on top of the boat and, eat me up. And, I quickly went down below and I took pictures and I grabbed my boat hook as if I was going to, stab it in the eye or something like that. And then later when I look at the pictures, I realized it was this tiny little fin. It probably wasn't even a shark. It might have been like a pilot whale or something. But, you just really get that sort of intense connection, particularly the nights at sea and the sunrises and sunsets. And it's a rare, privileged experience, really.
Maybe because I'm an anxious New Yorker, I'm just wondering about the anxiety of being out there.
It's so calm.
I know it's calm, but there's this feeling that I have. I'm not a sailor. I've sailed before, but I would not consider myself a sailor, of not being in control of when you can get back on land. And that part of this totally freaks me out here. Were there any moments out there that you just found yourself terrified?
Like when the engine died on that trip across the Atlantic?
Yeah, Tim, totally. I would say 90% of the time I was an anxious wreck, and my people are also from New York, so I have that strain.
Okay.
I think, and that's really, the book is really about some of these great sailors who've gotten over that first anxious experience. I kind of never did. I did my first trip across the Atlantic, and then afterwards I was like, okay, I think I'm good. But I do kind of wish that I had continued on, because you look at some of the really extraordinary historical sailors, Bernard Morticia, Robin Knox Johnson, Ellen MacArthur, even, the early ones like Joshua Slocum, who got over those initial anxious moments and then were able to carry on and really be calm and really enjoy themselves at sea. And often that's when these sailors really got these experiences in the natural world where they could finally relax and not have to worry so much about this thing breaking or
there's something always breaking on a boat. You know that. It's always breaking. Well, what's the joke? They say it's like hours and hours of boredom broken up by minutes or seconds of just sheer terror and chaos. And that's kind of sailing, right? Because it's really quiet out there, and then you have to go into harbor and you have to dock, and it's like there's always something that's going to go wrong.
That's right. And, for a big part for solo sailors, trying to steer the boat and trying to get rest is a big part of it. And so one of the things I talk about in the book is sort of the development of various technologies that have made it a little bit easier for solo sailors, whether it's GPS or fiberglass or the marine engine. But self-steering mechanisms, whether they're wind-based or electrical, have made a huge difference.
You had a wind...
but even in my case...
Did you have a wind vane? That's what you used, right, to go across?
That's right. I had two different types of steering. I had a wind vane self-steering, which doesn't require any power or any fuel, and that is about the most magical device on the planet. That was developed sort of in the 1950s and 60s for recreational boats, and that was just amazing. But that's based on relative wind. So if you went to sleep for 2 hours and you got up, the boat is adjusting itself based on the angle of the wind. So if the wind shifts, your boat is going to change. And then I also had a little electrical tiller pilot, which you could set to a compass point.
I'm curious about the reasons behind this and how, not necessarily yours, which I want to get to, but the way that they've shifted over time. Because as you mentioned, in the 1700s, a lot of this was exploration. It was in search of riches. It was in search of, at that point, not necessarily new lands, but sort of, right? The great exploration of the seas and of the earth. But these days, a lot of it is about recreation, and it's about sort of personal challenges. And I'm wondering how you can characterize the evolution of why someone would do this.
Yeah, no, that's a great point, and that's certainly something I sort of trace through going over time, because that the whole idea that sailing by yourself across an ocean, that isn't completely just a bananas, idiotic kind of thing. That this idea that over time people started to respect that is a sort of interesting transition. And you do see sort of blips. Everybody is different and everybody's complex about whether they're escaping a family situation or they are trying to make money or they're trying to make fame for themselves. But you do see sort of these sort of blips of where there's more recreational sailing and then even more solo sailing. One of these blips is right after World War II, and I focused the book a lot, sort of frame it on Ann Davidson, who's the first woman that we know of to sail alone across an ocean, and she sails in 1952, and she's part of this whole surge of people from Europe, from North America, from all around the world that really are going out to the ocean and seeking that sort of respite, that sort of perception that the ocean is a clean, unhampered space, particularly after the trauma of World War II.
Yeah, it's pretty fascinating, right, to kind of hear what they sought out, right, to help them through it. I want to go back to something you said earlier, and that was, I think, the first solo circumnavigator, or who was actually, let me let you pick the story that you just were really drawn to, because there's older folks a long time ago. There's teenagers, which I'm always blown away by, someone who's a teenager who gets in a book and their parents are in a boat and their parents are like, yeah, go for it. I think about, there's a Netflix movie just on Jessica Watson, an Australian teenager, and it's kind of wild.
Yeah, Jessica Watson is fantastic. And I think one of the things that I talk a lot about in the book is this relationship between being a writer, because going to sea, maybe even for you, Carol, even when you go out just for an afternoon or for a day, it's a literary endeavor. You're keeping a logbook, maybe you're writing a note, you're writing a letter, you're reading about other sailors. And so it's this very sort of, almost all of these people that are going sailing alone are also thinking about it artistically, and some of them are thinking about writing a book even before they've left. And so someone like Bernard Martissier, who in the 1960s was the first to sail solo nonstop around the world, 1.5 times around the world in the late 60s. And for him, from the very start, it was about making a book, about crafting this work of nature writing, not even as much about the expedition itself. It was like as if Thoreau, was climbing Everest.
Just got about a minute left here. I mean, 30 years of sailing, we saw our first whale play with us in a boat off of Rhode Island just this past summer. And my husband and I looked at us, maybe it's time to sell the boat, because it was just so unbelievable. But you have about a minute left here. Is there a moment in time where you just, I don't know, a little story before we go, unfortunately?
Sure. Yeah. I think one interesting story is, if you're watching in the news, you're seeing orcas that are damaging boats off Gibraltar that are actually seem to be knocking into recreational boats. And one thing that you learn from the history is that's been happening for a while. And one former New Yorker, Teddy Seymour, born in Yonkers, the first black sailor to sail alone around the world. And he was knocked by an orca off the Red Sea for about a half a day, but luckily just kind of banged into his self-steering gear. But he tells a great story of it.
I got to tell you, we watch the orca videos and we watch all these people, whether it's the YouTubers, Project Atticus or Vagabond, or, my husband and I are obsessed with it. And you get to get a feel of what it's like to be out on the ocean.
Professor, just 15 seconds left. Would you do it again?
I think I do it with friends.
Yeah.
Okay.
That's what that's what most of them do. And some of them have a couple kids and they're going around the world, but they eventually on some of those big crossings bring friends on. This was so much fun. I hope we get a chance to talk again, and maybe you will buy. Do you have a boat now?
Don't. Yeah, if anyone would like to donate one, I'm available.
Well said, well said. Richard King, his book is Sailing Alone, A Surprising History of Isolation and Survival at Sea, joining us from Santa Cruz, California. A great place to go sailing, no doubt about that.
Richard visiting Professor of Maritime History and Literature with the Sea Education Association.
2020 news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. NVIDIA shares holding on to gains of 3.8%. NVIDIA, the chip maker at the center of an AI boom, it delivered another bullish sales forecast showing that spending on AI computing does remain strong. Dan Morgan is with Synovus Trust. He was a guest right here on Bloomberg Business Week.
You know, quite frankly, guys, a 10-for-1 stock split is absolutely huge because like Amazon and Google, when they both did 20-for-1 stock splits, it really allows the retail investor to participate more in terms of buying more shares. And it's a psychological thing, but it does boost the stock.
And again, stock getting a boost after hours, up now by 3.9%. Other earnings after the bell, Snowflake forecast product revenue for the second quarter. That guidance beat the average analyst estimate. Elf Beauty forecast net sales for 2025. The guidance missed the average analyst estimate. VF Corp reported adjusted loss per share from continuing operations for the fourth quarter that missed estimates. VF's brands, by the way, include Timberland and The North Face. And News Corp and OpenAI have signed a landmark multi-year global partnership. Target shares lower today after saying comparable sales declined 3.7% for the quarter through early May, and the retailer is staying cautious on its near-term outlook. And Lululemon Athletica shares lower today after the company said its chief product officer is leaving, raising concerns among analysts that the athleisure brand is losing its edge. And sources tell Bloomberg some Rite Aid creditors have asked advisors representing the bankrupt pharmacy chain to cut their professional fees amid mounting liquidity concerns, this according to sources. And those are some of our top company stories at this hour. I'm Charlie Pellet, and this is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio and Television.
All right, everybody. Getting ready to wrap up here on the Wednesday edition of Bloomberg Business Week. Just about 4 minutes to go on our part. Watching shares of NVIDIA still up about 4%, but do not go anywhere because coming up is Daybreak Asia over the next couple of hours.
Doug Krisner is here.
I was actually, commuting home, Doug Krisner. You're in my ear. Brian Curtis is in my ear. It was kind of, you do.
That means you're going home too late.
You do a good job.
I'm telling you,
that's
very true. You should be listening to Doug Krisner when you're at home.
She's a hard worker. She's here very late.
I know.
That was the case last night.
Yeah, I was here a little bit.
I just saw from my the Bloomberg alert that Nikki Haley is saying that she's going to vote for Donald Trump.
I saw that too. Yeah, at an event in Washington, D.C. today.
Yeah.
Is that her first comments since bowing out of the race too?
Yeah.
First public comments.
So it was interesting to know what the strategy may have been behind this, whether she wanted to have a voice in the platform or something, and then she was, there may be something happening behind the scenes.
She was still getting votes right after she dropped out.
That was one of the surprising things. What?
Does this surprise you at all?
No.
Okay.
No. But I just had to say it because it occurred on my Bloomberg alert here.
Hey, you know what else occurred today?
It's a way of promoting Joe Matthew at the top of the hour.
Oh, well
it's good promotion.
How do we promote you?
Well, we're going to talk about NVIDIA a little bit. This is pretty remarkable, not just the fact that they delivered beyond expectations on the revenue side for the data center chips. If you look at the gaming chips, a little soft, not by much.
Do we care about gaming?
No.
It's like $2 billion of revenue for the
I mean, that's not the business going forward, right?
So, but
I love that you brought that up.
I say that only because
I'm sorry, who let this guy in?
That's how this company began.
That's
the genesis of this company.
It's a good point. And you know what I will tell you, Doug? I will still think of NVIDIA. I still see that logo, that NVIDIA logo, and it makes me think of gaming.
That's it. The gaming processors that the gamers needed to have in their PCs
got them to where they are today.
Exactly.
When I was
know.
Exactly.
That's pretty
That's
cool.
the R&D part of this story.
And they're still spending on R&D.
Yeah.
And it's up a lot from last year. Right. So they get it. They are right ahead of the pack. Hold on. They're right ahead of the pack. And so they are smart if they can keep that edge above everybody else.
I feel like when I was in college and I would walk into someone's dorm room and I'd see that they had like an NVIDIA.
Tim, like on a Saturday night.
Right.
Do you almost games? Are you okay? First of all, we didn't have.
Let him finish the story.
She's like mimicking me looking at an iPhone. We didn't have iPhones in college.
What did you have?
Yeah, we didn't have any.
What did you have?
We didn't have any phones.
But
we
the
had
point
cell
is,
phones. We had little flip phones. But you walked into someone's room, dorm room in college, and they had an NVIDIA computer. You're like, this person's a serious gamer. Like that's the signal.
That's right. And so when artificial intelligence the guys that were in the need of processors that had the speed and capacity to be able to crunch these numbers, it was a natural move into these graphics processor units. And so I only mention the gaming portion of the revenue being disappointing because we have to remember that's how this company, that's really what they started as.
Well, it just goes to show you, shows to go you, as they say. Like, you know, you put R&D out there, you throw it some places, and, you know, maybe you have a good business, but then all of a sudden something happens and changes in the macro world or whatever.
I don't know, AWS?
Or Gen AI. Right. Well, it's interesting that we just talked about,
Well,
you know, Alphabet and the moonshots, right?
They delayed the purchase of the most advanced chip because they're waiting for the next generation.
Right, I was saying AWS started as a side project at Amazon and turned into the
Are you
cash cow
talking
for the
about
company.
Blackwell?
Right.
Yeah.
Blackwell.
Right.
It just sounds like code Blackwell, don't you think?
And a 10-for-1 stock split. That's icing on the cake, isn't it?
It is, but I don't know.
Forward
I get
stock
pushback. I get pushback when I talk about this because
Why?
I mean, it's up for debate whether stock splits are as important as they used to be now that you can very easily buy fractional shares if you're a retail investor.
That's true.
I'm looking at the
Force share of the
dividend,
company.
150% increase to 10 cents from 4 cents a share.
That's a big deal.
And how much cash that they were generating? I mean, pretty wild.
But just as a headline.
What?
Yeah, 10 for 1.
Yeah, 10 for 1. I'm in.
It's not their first time doing a stock split.
It's a